Hello everyone, welcome back to another session on dollar INR. It is the end of the week, so let's recap what happened in the week and let's try and evaluate how we can use historical data to have some kind of an informed decision for the future. Okay, so this is the dollar INR onshore chart that we usually look at, and since it is onshore 9 a.m. to 3:30 p.m. there will be some price gaps. I want to show you how dollar INR always ends up filling its gap, something very critical that we can use for taking efficient decisions. I want to show you that. See, there was a gap that was formed here, it got filled up in this rupee gain. There was another gap here that again got filled up in this move. But when that rumor of India US trade deal happened, we saw a big down gap here. Usually dollar INR makes an up gap, but here there was a down gap, and this week, surprise, surprise, this week we saw the rupee weakening and the dollar going higher. That gap filled up this week. And if you see, the dollar INR has again come to that static range of 88.70 to 80 that we saw in early September till about early October. Okay, so rupee is again weak, come back to that all-time low levels of 88.70, 80. And the rupee gain period was very small, very tiny. Okay, I'll show you the offshore chart as well, and we'll try and understand how things have worked out there. See, we have been following this chart for quite a while. So we saw this upward moving, upward sloping trend line, linear regression line, and we also were following this, sorry, let me get this pen here. Okay, so we were also following this moving average, which is the 50-day moving average that we are usually following, and see how the prices came just below the moving average here, and now it has gone up higher again, but still within that linear regression trend line. So what does that tell us? Remember last week when the prices were around this time, around this level, we had suggested importers to hedge. Okay, now the prices are almost 1 rupee higher or more than 1% higher. So what do we do now at the current level of around 88.70, 80? I saw a lot of exporters getting nervous here because rupee had suddenly gained. Okay, so exporters can now look to do some hedging. We are back to 88.70, 80. Okay, I'll just get this back here. Okay, so we are back at this level. Okay, the all-time low rupee level of 88.70, 80. See, these are the prices. So the exporters should look to do some reselling again. They were quiet for a while because rupee had gained, and you should look to do some hedging. You can do a mix of forwards and options as well. Importers got a chance here, and as we had recommended last week, for all the importers to do some hedging, I am sure they would have hedged. If the importers have not hedged, the dollar importers have not hedged, then you should look to do some vanilla option at this high price. No point in fixing up a forward rate at such high spot prices. Okay, so vanilla option for importers, and for dollar exporters you can look to do simple forwards as well as some vanilla puts to diversify your risk. Okay, so that is it from my side for this week. Please join our WhatsApp community for more such insights.